What's going on, traders? Sandro O'Connell with Pristine Capital coming at you with yet another market recap video. It is May 21st, 2021. Please go ahead and click the like button at the bottom of this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today we are going to talk about options expiration. We will talk about the price action in the headline indices. We're going to go under the hood and we will check out our sectors and style factors. Talk about some of my trades for the day. I did do a lot of trading and a lot of cleanup heading into OPEX. And then last but not least, we'll wrap up some options order flow. I know it is Friday, so I'm going to try to do this video a little bit quicker. I'm going to shoot for under 15 minutes today. All right, so let's jump right into it. All right, so today was options expiration. For our box scores, we had the S&P 500 as measured by the SPY closed down 0.08%. We had the NASDAQ QQQ finish down 0.55%. We had the IWM small caps finish up 0.26%. And we had the Dow Jones close up 0.36%. For today's price action coming into OPEX, I'm always expecting a lot of chop on the tape. And it's very tough to divine really like any signals from anything that you're seeing out there. A lot of it is just, options players that are really just squaring up their books. There's definitely some pinning dynamics as well where, there's a bunch of stuff that really does not move. It just kind of chops back and forth. And that's sort of what we saw today by and large. The S&P 500, we opened up here. Let's take a look at this hourly chart. What you can see is we hit resistance at the same level that we've been hitting resistance at for the past week, and we could not make it past this weekly value area high. Is that the end of the world? No, definitely not. But it just goes to show we didn't have the strength to actually push above resistance. We're still in this chop zone, sort of like a no man's land, so to speak. The NASDAQ QQQ was the weakest of the indices. And today we actually had, I would say one of the biggest headlines that hit the tape was China saying that I believe in Hong Kong, they're going to further regulate cryptocurrency. And unless you're like a gazillionaire, you can't buy it or sell it or own it. The Chinese government has really been coming out very strong against cryptocurrency. And the cryptocurrency market right now just has so many headwinds in terms of we had the Musk tweets. We keep having these Chinese headlines hitting the tape talking about regulation. Then we have Diem, which is hitting the tape as well. I don't think as many people are focusing on that as they probably should be. But that's essentially Facebook's stablecoin. It uses the blockchain technology. And the government is essentially backing them at this point. So the CEO of Diem, it's not like Mark Zuckerberg is going to run the whole thing. The CEO is pretty much like a government plant. Like I looked at his resume and it's prior government experience. So it's essentially, nobody's really like connecting these dots, but it's essentially a government stablecoin. So I think there's that dynamic as well. And now the charts are just kind of busted. The interesting thing though, and how that relates to the Qs is, so we have a couple dynamics here. Tesla has Bitcoin on its balance sheet. Tesla is in the NASDAQ. It's in the S&P 500. And it's by far the largest holding in ARK. So it really does have ripple effects into equities when cryptocurrencies are tanking. So we'll just jump right over to the Bitcoin chart since I'm talking about it. And we have not retested the lows. You can see we made a low on this chart of 30,000 on Bitcoin. We closed here today at about 35,000. But this is just not confidence inspiring at all. This shows that Bitcoin and these cryptocurrencies, they're in downtrends. So really, could we make it down to this 20,000 mark? It could happen. It definitely could, especially when there's no valuation support for this thing. It's not like a stock where it's like, oh, it pays a dividend, it has cash flows, it's not really like that. So this, it's a big momentum trade that I don't know if this is the end of the unwind. It certainly could be, or the beginning of the end, meaning the beginning of the big unwind. So who really knows? This is just, it's not fertile hunting ground for trades if you're a price action trader. Let's just put it that way. If you're a hodler, then maybe. But anyway, so yeah, we had that weakness hitting the tape, and I think that really rippled through the tech complex, the art complex, and it sort of got us off on the wrong footing. Let's take a look here. We'll go a little bit deeper, and we'll look at market breadth. You can see market breadth was not bad at all today. It was positive for the SPY, for the IWM, and for the Dow Jones. Only negative for the Qs. And Qs were a big outperformer over the past 1 or 2 trading sessions. So not really the end of the world that Qs are taking a bit of a break. Looking at our FinViz heat map here, you can see that essentially the tech monopolies were all down for the day. Nvidia, another big news headline, they announced that they were doing a 4-for-1 stock split. So I actually got long an Nvidia call spread. A lot of times it is bullish for these stocks when they announce stock splits. So I was like, okay, I'm going to see if I can harvest that edge. And I just put a call spread on, essentially when this thing first opened up for trading. Yeah, you can see we had the high beta stocks doing well. The banks did pretty well. Industrials, utilities actually did okay too. And then we had sell-offs in, like I said, tech, healthcare, medical devices, consumer defensives, those kinds of areas. So this was almost like a reversal of yesterday's rotation. Looking a little bit deeper at our sectors, you will see the blockchain ETF is now at the bottom of our list. Home builders, which were very strong, are now at the bottom of our list. I actually took a short position in the home builders. And the reason why is, one is technical. So as I look at this, to me, this looks like the beginning of a phase transition from a bullish trend to a bearish trend. What I mean by that is we had a monumental run for months and months and months. We just kept climbing and climbing and climbing. We had this, which in hindsight is like quintessential topping candle. And then since then, we made a capitulation low. We had a bounce, but the bounce was to a lower high. And this almost looks like another bounce to another lower high. And we closed below the 50-day. So with the home builders, the other dynamic, I don't want to go into this for too long, but the other dynamic is the Fed has actually gone into a little bit more detail as to their tapering of asset purchases. And they are saying that they're going to be tapering from mortgage-backed securities. And I used to work on an institutional fixed income trading desk, and we had a desk that traded mortgages. They traded TBAs, structured assets, and essentially, if the Fed stops buying as much mortgage bonds, essentially what happens in the food chain is, banks provide mortgages to people that are buying homes. Then those mortgages are packaged up into these structured products, and then institutions and the Federal Reserve buys them. So if the Federal Reserve is buying less, that means there are less mortgages to originate, which could mean a rise in mortgage interest rates. So overall, just for the home builders, I'm like, okay, the theory is making sense to me, and then I'm also seeing it play out on the chart. So I ended up taking a short position there as well. And then what performed very well today? We had regional banks perform very well. We had financials perform very well. And those were really the two standouts. I see aerospace and defense also, but other than that, everything else was kind of weak. Now let's take a look at our style factors. Style factors, we had best performers were cyclicals and value. High beta did well also. And then we had some give back from growth and momentum today. So yeah, we took a couple steps forward on those momentum names. Now it looks like we're taking a step back again after today's price action. So let's jump into some of my trades for today. We're going to run through this pretty quickly today. Okay. So options, trades. What did I do here? So this, I put on this NVIDIA call spread. I had some Lotto XLF calls for May 28th. Took part of those off for a nice winner. I had paid 41 cents, took those off for 47 cents. That one worked out pretty well. Roblox, which is my largest position. Roblox had an amazing day today. Yeah, so Roblox closed up 8%, which is awesome. So we had the earnings report here, then some nice tighter price action, and now we got the breakout. This came on very high volume. We did not close on the, on the highs. So I'm curious to see if we trade in the wick next week. But regardless, this was a really good price action. Roblox by far my biggest position via common stock, and then I also had call options on it as well. So what I did, Roblox was really pumping throughout the day. This thing got up to 84 bucks and change at one point. So what I did, originally I was like, I should probably just take these calls off. But then on the other hand, I want to stick with it if, Roblox could make a move in the next month or two up to 100 bucks a share. I think the fundamentals are super strong. I think people are starting to realize they're not just a regular gaming company. So yeah, I want to keep myself open where if this thing wants to run, I want to maintain my exposure. But what I did was I had some July 75 strike calls. I sold some May calls against those. So I was able to sell the May 28th, which is next Friday. I sold those 95 strike calls for $1. And my July 75 strikes I got for $8.35. So I knocked off $1 from my cost basis. And I was like, geez, if Roblox gets up to 95 by next week, I'll be so happy. Even if it runs to 100 and I don't get the full gain for some of those calls, that would just be such a happy path. So yeah, I sold that against it. And then what else here? I had a Tesla call spread. This one expired worthless. It was the 600 by 610. I think this one had a decent shot of actually doing something today, but really the crypto weakness sort of got in the way. Who knows? Maybe it did, maybe it did not, but Tesla's pretty much trading in line with cryptocurrency. And once that headline from China came out, I was like, okay, this one might not work. So that one expired worthless. My Google call spread, this one expired pretty much for a max winner. I closed it out at $9.85. I had paid $4.89 for that one. Then I had some XLV calls that I closed out for a nice winner. I got long some XHB, the home builders puts that we were talking about. And then I also got long some Expedia. Expedia, I noticed there was a sizable call buyer on the tape today. And I noticed some of these names are beginning to set up a little bit. Like Expedia, this doesn't look like the traditional ideal setup, but I've seen this happen so many times with stocks where you start chopping around in a range like this and then you get, a big breakout to either side. So I do think that given the vaccines, all that sort of stuff, I think there's a few specific travel companies that I think actually have good fundamentals and, could see a positive tailwind. Expedia is one of those, so I took some calls there. And then I also have exposure to Airbnb for a very similar trade. And Airbnb, this one, has had a huge correction. They actually have a big announcement on Monday. They said it's going to be the biggest change to their platform in the last 12 years. So I kind of like this one down here while it's completely beaten up. And you can see, although it closed red, there was some dip buyers that came in at the end of the day. It's pretty interesting. And in terms of common stocks here, I stopped out of pretty much all of my crypto related exposures. So I stopped out of Coinbase for $227.35. I'd paid $245.50. I just would rather be in something trending up because, it's one thing if you're in some of these crypto assets. Coinbase, for instance, I bought right here on this candle So it's not like, oh my gosh, I've been wearing Coinbase the whole way down, but I was really playing it for a bounce. Here we ended up getting this bounce from down here, but if we're just going to continue downtrending, I was like, I'm not sticking around in this thing. A lot of these cryptos that I bought the dip in, very similar situation. So I'm like, I'm going to nip these because I have no intention, like, if these keep going even further and further down, like, I'm not going to wear these down. I want to be in things that are in uptrends. And right now the wind is really in your face if you're investing in these cryptos. I know most crypto investors, they don't want to hear that, but it's the truth. Yes, I stopped out of coin. I stopped out of Ethereum. This one, so I had traded Ethereum for about a 50% gain. I re-entered on the dip, and this one just didn't work. So I closed this one out for 24.18. I had paid 37.96. I just had too many tape bombs hitting the space. We'll gladly return if and when it starts trending again. But would rather allocate this to something more productive. And yeah, I'm glad that I did just get myself out of these. Because yeah, this Ethereum ETF, this thing ended up closing in value pretty much like right on the lows from the other day. So I'm glad that I stopped out of this. And then I had some Playboy exposure as well. I stopped out of that one too. They have exposure to NFTs, so I was like, I can't have this on the books. So I stopped out of that one as well. And then the only long position I did take via common stock was Ford. Ford. Yeah, Ford had a nice breakout. So this is like the anti-Tesla, essentially. They have, I believe it's like their new Ford F-150s. And it's so cool where you can use them to actually power your house, like as a generator. I just noticed this stock, it's having a beautiful breakout right here. It's not, as like sexy as Tesla, but this weekly chart looks pretty nice. We have a virgin point of control up here at 1485. So yeah, this one looks pretty solid. But that about does it for my trades for today. Real quick, let's take a look at this order flow. Yeah, so this was the Expedia order that I saw. It's August 175. I actually got in a little bit cheaper than this call buyer. I was able to get in at 11.30. They got in at 11.50. And yeah, you can see puts going up for Tesla, some hedges going up. Then we also have some bull activity for Nvidia, bull activity for SPX. Not really all that much. The one that is interesting is Boeing. Look at this one. So Boeing, somebody purchased the November 2021 170 strike calls. Check this out. Boeing, not too shabby here. This is a really nice gap up. And then we just held that gap. We closed over the 20-day. So this one is not really the prettiest chart, but it does have that element of an expectation breaker. And just looks kind of interesting. I didn't take this one because, again, this one's sort of in like a downtrend. Yeah, I would not be awfully surprised if we got a move into value in the coming weeks. With that being said, that about does it for this recap video. Hope you all had a great trading day. For all Pristine Capital members, I'll be sending out my weekend market analysis. I'll be sending out the weekend watch list and the weekend watch list video. So I will see you all on Monday.